Now, there are two major reasons why I stopped making use of order block for my entries, okay? Now, this is the problem I was having, making use of order block as my point of interest. For instance, this is the first scenario, okay? After price has expanded, okay? Of course, this is the order block right here, the last down candle before the up move. That is the order block, bullish order block. You will be waiting for price to come back to this place for your entry. And then you are going to miss the move because price will not come to this place for your entry. That was the first challenge, and I'm sure some of you guys see experience this. And then the other challenge is this: you wait for price to come to your order block, definitely. All right, so price come back to your order block. Then why you place the trade? Because obviously when price come to order block, bullish order block is for buying opportunity. When you place the buy order, the market use it as a reversal and then start smash to the downside. Now, I'm not trying to say other block does not work again these days, because I'm just telling you guys what I'm doing right now that is better than other block, okay? I am aware of some people that trade using other block, like supply and demand style of traders. Like this style of trading, this particular style of trading, this style of entry, it's been long I saw this kind of pattern in the market, like price expand, you come back to this place, and then you take. I'm not sure this pattern still exists these days, but though I don't know if it still exists. You know what? The reason why I don't value this pattern is because after this expansion like this, all right, this will be the other block, the origin, okay? So you can't tell me that price will still come back to this place again, all right, for another entry opportunity and then expand, come back to this other block. They don't do all that. All these things are fancy stuff we see on textbook or we see on social media that describe market structure. But in real life, when trading the market, you don't see all this fancy stuff, okay? Like as I told you guys, price does not necessarily have to come to the origin. They just expand from any level inside this range. So these days, this is what I'm doing that is helping me to catch any movement in the market, okay? And I'm going to show you guys example on the chart by the time I'm done with the explanation, okay? Now, definitely there will be expansion in the market. Expansion is something as impulse, okay? On any time frame, maybe 1 hour, 30 minutes, 4 hour daily, there will definitely be an impulse move to the upside, okay? All right. Now I am interested in from this low, right? From this low to this high, okay? I'm interested from this low to this high. I know definitely that I am going to get a turning point inside of this range. Now, with this knowledge I'm going to give to you guys, you don't necessarily have to make use of Fibonacci anymore, because the knowledge of Fibonacci means if you get an expansion to the upside from this low to this high, you have to wait for price to come back, below 50%. And sometimes while you are waiting below 50%, the market will just retrace to like 30%, 20%. And then from there, they start moving to the upside. So what we are going to do is we are going to read this price action, okay? This is how to read it. Let me take off this Fibonacci retracement here. This is what I do, all right? After an expansion like this, from this low to this high, as the market is retracing to the range, back into the range, it does not matter the level, whether it's below 50% or above 50%. As the market is retracing back into the range, okay? Now, I don't need to wait for price to get to a fair value gap or price to get to another block. No, 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 no. What I'm just looking for is a reaction. As price is coming back into the range, I just need a reaction, because obviously I know what the direction of the market is, okay? The direction is bullish. So I just need a particular level that I want to get on the trade, like buy position, and then be done with that trade, okay? So I just need a reaction. Now, that reaction does not mean that the moment, because obviously this is how the market move, okay? The reaction does not mean that as it's retracing lower like this, then if I see any significant slight move to the upside, I should jump into the trade. No, that's not the reaction I'm talking about, okay? The reaction I'm talking about is this. As price is coming lower, let's say this is a 1 hour time frame, guys. What I need to do is use 5 minutes time frame or 3 minutes time frame to wait for a change in direction like this, okay? A change in direction to the upside. Now, after this change in direction, this is where you guys need to pay attention very well, okay? Price still need to come back, into the range, because this is the expansion, okay, to the upside, just like this one I just explained here. Then price need to come back like in form of retracement. So we should be expecting a retracement back into this smaller range or lower time frame. Now, the same scenario that I have been explaining so far is the same thing going on right here, okay? Some people may wait for price to come to other block here, okay, like this one. Some people may wait for price to come to this other block like this one, okay, on this lower time frame. But the way I do it, the way I teach my mentorship students, we don't wait for price to come back to the other block or even the fair value gap. This is the maximum level I want price to get to, this breaker block right here, okay? There's a breaker block right here at this level. This is the maximum level I want price to get to. and then I take my trade at this level. Now, if you observe very well, you will see that all this whole drama taking place here is on lower time frame inside of this retracement that is coming to the downside. Okay, so this is what we do. This is what I teach my students. Wait for price to come to this breaker block. This is where you press the buy button at this place. Okay, when you press the buy button, you don't use your lower time frame as a target. For example, your take profit, it has to be on higher time frame, and then chances are price will come back to take out this liquidity and trade above here. So we use here for our entry, we fine tune it, put stop loss below the low of this retracement, and then allow price to come back to take out this buy side dollar liquidity. Then this is going to be our ultimate target. Now I'm going to go to the chart and show you guys example of this thing I just explained. But before I go to the chart and show you guys the example, for those of you that are still making inquiry for regarding the mentorship program, there's a link in the description part of this video that will lead you to my WhatsApp directly. Then you can make inquiry regarding mentorship. Now this mentorship covers all level of trading from beginner to intermediate to advanced, even to this very level that I am currently making money from the market. This mentorship covers everything, and you have opportunity to trade with me on weekly basis because I post all of my trade on the mentorship platform. So click the link in the description part of this video, and then you can enroll on the mentorship program and have access to trade with me on weekly basis. Now we're going to use example with this recent price action, but I have to go to 1 hour time frame so that I can be able to explain it better for you guys. Now, if you take a look at this current price action here, this is just a typical of what I just explained today. All right. You see, this market exploded from this level to this place. Okay. Now, a supply and demand traders is definitely going to miss this move. All right. Because after this move, they will be waiting for price to come back to this other block. Okay. This other block right here, and they are not going to get it. All right. This is why most people, they miss move in the market. Like I told you guys, with the knowledge of what I'm teaching you guys today, you can even choose not to make use of Fibonacci, because if you use Fibonacci here on this 1 hour time frame, you see price is not on the discount level yet. So you too that make use of Fibonacci, you're going to miss this move. And again, if you wanted to use fair value gap, you will see price is not making use of any fair value gap here. All right. So a lot of things are changing in this market, the way we approach entries and all that. That's why I keep on showing up here on YouTube to update you guys on how we are doing things, okay? I'm not trying to say other block and fair value gap does not work. I'm only trying to help you guys avoid missing all these opportunities whereby price will move in the market and then you are not on that move. So with this knowledge, you will be able to avoid it. So now let's take a look at how we could even get on this move, all right? Because as price is retracing, we'll have to go to lower time frame. I need to go to 5 minutes time frame here. Now, this is the lower time frame price action. Can you see how beautiful this thing is? You see, the market came back, came back, came back. Let me draw it out so that you guys understand. Like this, like this. So this is what I want you guys to start doing, all right? Like this. And then we had a break here, okay? After the break, where is the breaker block? Here. This is the breaker block. Of course, you guys should know what breaker block is. This is the breaker block, all right? And as this is the mean threshold of the breaker block. Okay, so you can take your trade at this point. So beautiful, so beautiful. Why somebody that is waiting for other block, they'll be waiting for this move. You can see how the market is exploding right now. So somebody that is waiting for other block will keep waiting, while in their mind they keep hoping that the market will get to their point of interest. So a lot of things are changing these days in the market, guys. So many things are changing. That's why I'm here to keep updating you guys on recent updates, recent development in the market. So instead of you to be waiting for a static, we call all those style of trading static type of entry, instead start making use of this dynamic style of entry, guys. I believe this video will be helpful and insightful to you guys, especially those of you that are new to this channel. Please make sure you subscribe, turn up your notification button. I'll see you guys next upload. Peace.